Hi guys, today I'm going to be showing you what I believe to be the ultimate scalping strategy on lower time frames. So this will work on the 1 minute, the 5 minute, the 15 minute, and even the 30 minute. And of course it can be applied to higher time frames as well, but this is specifically designed for scalpers who want to catch small profits and smaller trades on a lower time frame. So it's very, very powerful at that. I just want to start this video with a little warning to those of you that don't regularly trade these time frames. If you can avoid them, this video is mainly for people who have experience trading them, but it can serve as a nice education for those wanting to get into these time frames. They do tend to be harder with higher frictional costs, and you risk blowing your account faster due to over trading. But if you manage to control yourself, they can start to become profitable, and you can become a profitable trader on those. So this strategy is going to use 3 of our main indicators. So we have LuxAlgo Premium loaded up, version 5. So what I've done here is I've turned on signal mode to confirmation minimal to have it nice and clean on our chart. Then what we want to do is change the sensitivity to the recommended sensitivity on the dashboard. So I'm going to change it to 33 just there. You can use any form of optimization really. You can use Optibot or Autopilot if you wish. I'm just going to go with a dashboard for now. So there we are. We've set it up for the scalping. Then what we want to do is load up Lux Oscillators Premium. Once we've done that, we want to go into Type and change it to Ultimate MACD. So we're using the Ultimate MACD for this strategy. The reason we're using the Ultimate MACD is because it tends to and is designed to be earlier than a regular MACD, and it will also be less noisy than a regular MACD. And feel free to compare them yourself and see what you think, but this is what they excel at, and they can be predictive in nature, making them perfect for those in and out quick scalps. So we've loaded that up, and then the final thing we want to load up is LuxAlgo SR Patterns Premium. SR and Patterns Premium, sorry. So we'll go and we'll turn everything off. Normally pattern detection is on, so just turn everything off and turn predictive SR on with ranges set and an SR significance of 2, and you'll see a bunch of these ranges produced on your chart, and those are going to be important later because these are going to be our take profit and stop loss levels, because they're very, very clean and easy to use and very adaptive to the market. So the strategy is quite simple, and it's actually quite adaptive. So of course I'm using the predictive ranges here for taking profit, but you can use anything to take profit. You can use fixed percentages. You could trade 0.5% or 1%, or you can use ATR for some kind of take profit stop loss system. You really can use any take profit system or stop loss to your liking, to your choosing. It doesn't matter. I just prefer for this example to make it Lux based, and the predictive ranges fit that quite nicely. So here's how the strategy works. We get a sell signal here, as denoted by a red label. So this means we are in a downtrend. Then what we want to do is wait for our Lux, the Ultimate MACD, to turn red, and it turns red on this candle. So here we want to enter a short position. And what we do is we now enter a short. So we have 2 choices. We can target the first level of the predictive range. So that's, look, at the end of the day, that's a 1% scalp. So for scalpers, that's plenty. But you could also target the lower area, allowing for about a 2.5% gain. And it's very, very simple, and that's very dynamic. So you can pick what you're using. For this example, I'm just going to be targeting the first level. Let's make it very small, very simple ones, because you're not always going to be able to exit at the exact bottom. But if you're a trader that likes to have a higher risk reward, absolutely you can target the bottom. So let's leave it there for the moment. Then we get our blue wave. Well, we're in a downtrend, so we want to ignore this blue wave. So yes, look, there was an opportunity to make a little scalp, but we don't want to move against the market. Next up, we get a red, the Ultimate MACD turns red. So we enter a short position on this candle. The close is here. And then once again, rinse and repeat. So we can exit at a 1.5%, or if we're a trader that likes a higher risk reward, there, a nice little 3% scalp we can make. Next, we see it turn blue, and because it's predictive, yes, it's nice and early there, and we could have made profit, but we don't want to move against the market. That's a little risky for us. So we get a buy signal, denoted by this green arrow, and the market moves up. We get a sell on the Ultimate MACD, but because there's a buy signal here and it's in an uptrend, we ignore this. We don't take the sell this time. the ultimate MACD turns blue here. So here, guess what? We want to enter a long position. And then we can target, well, we could target this level for a 0.5%, but realistically we're going to want to target one of these uppers. So for argument's sake, let's say we're going to target the upper one again, the most extreme one, and that's a nice 3.8%. And then the ultimate MACD turns red. So yes, we could have made a little bit of money here, but we don't want to move against the market. And then the ultimate MACD turns blue. We're still in a buy signal. We're still in an uptrend. So we enter a long position here and we target the extremity again, allowing for a 2% gain. And this is a strategy that can be rinsed and repeated. So I'm just showing it on the 5-minute time frame, but of course this can be applied on the 1 minute or any time frame. So I've gone through the chart and I've back tested 100 trades using this strategy, and I found a 77% win rate. So 77 out of the 100 signals played out and they hit a take profit. So the general rule I used is you target the next variation of the predictive ranges, and it's a very simple strategy to follow. And yes, you'll be targeting very small increases or decreases in price, so frictional costs will burn. But it depends on the broker or the exchange that you're using, and you want to try and keep those frictional costs down to a minimal. But it's a very, very efficient way to get in and out of the market quickly. So guys, thank you for watching. Don't forget to leave a like and subscribe, and leave a comment in the description of what you'd like to see me cover next.